Welcome to the Passive Income Machine podcast, where we show you how to break free from the grind and achieve real financial freedom in 10 years or less. My name is Ryan D. Lee, and I've helped thousands turn income into cash flow, trade fake money for real assets, and take back control over their time, their wealth, and ultimately their life. Each week, you'll get strategy, tools, and mindset to build your own passive income machine. So my friends, sit back, relax, and enjoy today's episode. All right, my friends, welcome back to the Passive Income Machine podcast. You are on the microphone today with me, Ryan D. Lee, and we're on episode number 14 today. And really, the topic of discussion today is relevant for the financial world that we live in today. So my question for you is, are you an investor, truly? Or are you just hoping that things work out? Now, listen, most people think that they're investing for retirement. I myself thought I was investing for retirement when I got out of college and started putting money in a 401k. But what most people are actually doing isn't investing. It's the exact opposite. And the distinction actually matters between investing and what we're going to talk about, because one leads to financial freedom and the other leads to a life of financial frustration, because you're never really in control of the outcome. So let me give you a little bit of backstory on this topic and why it matters so much to me. Out of college, I'll never forget when I got my very first paycheck. What should have been a rewarding and a validating moment in my life was just the opposite. I'll never forget when I got that first paycheck and I opened it up and I realized that I was making less money after taxes, insurance, deductions, all the things came out of my paycheck. I was making less money than I did as a side hustler, paying my way through college. And, I didn't really love what I was doing in the corporate world. And I felt like I needed to be there because I'm newly married. I've got a child on the way, and I felt this weight of responsibility on my shoulders. And so obviously, rather than just quitting my corporate job, I decided to climb the corporate ladder and try to earn my way out of the financial, what I felt, kind of financial being stuck that I was in. And so I started earning, and I'll never forget, I set a target, I set a goal, I set an ambition for myself. The further I got into the corporate world, the more I realized I was losing myself. I would spend more time at the office, more time working, more time stressing, and slowly over time, as my life grew, as my responsibilities grew, as my family grew, I started losing a little bit of myself along the way. I don't know if you've ever felt that, but every responsibility had a trade-off to it, right? It was less free time, less opportunity to pursue the things in life that I really wanted. And so I set this objective that I wanted to retire early. Now, I've always been a really good saver in my life. I was taught from a very, very young age the power of saving, and so putting money away wasn't necessarily that difficult. Now, there were trade-offs to that for sure. That's money I could have been spending, and that caused some early frustration in my family and marriage and things like that. But that's a topic for another day. But as I started putting money away for the future, I was telling myself I was being responsible. I was investing for the future. And I went from saving 10% of my income to 15 to 20, and 25, and so on. I just kept saving as much money as I could with this idea, this elusive idea of I'm going to retire early. Now, I didn't know what that meant. I just thought if I work hard, save hard, and the market did what it's going to do, then I'm going to, be able to retire in my 50s. That was kind of my objective. And I thought, you know what, I can stomach this. I'm in my late 20s. I could stomach this for 20 years. I could work and climb the corporate ladder and do it for 20 years if I could buy my life back in my 50s. And so I'll never forget, 4 years out of college, I was making, now over six figures. I had crested over six figures in my 401k, my brokerage account, and all of my retirement accounts combined. And I didn't really know what that meant, other than it felt like I was on track. It felt like I was making progress to this idea of being able to retire early. Now, I'll never forget in 2008, I learned the hard way that I wasn't actually investing. And so in 2008, I'm sure every one of you listening to this podcast have your own story. I'm actually really grateful for 2008 because it taught me the lessons that I'm about to share with you on this podcast. I lost a bunch of money. Now, I'll never forget when I opened up my 401k, I had no idea what I was doing. I don't know how many of you have ever looked at, those summary charts that they give you when you're putting money in the market, but they're all acronyms of funds that you could put your money into. It's ABC fund, XYZ fund, and they all have projections or historical historical averages of what those funds have done in the previous year, the previous 5 years. I don't think they extend beyond 10. Maybe they extend beyond 10. I can't remember. But they usually give you a pretty short window of what they've done. And I remember I was scanning through all of these unknown funds that I could put my money into. And I saw one that had the highest number next to it, right? It was 14 or 15 or whatever it was. And I thought, you know what? That looks great. If I could have my money earning 14 or 15%, why would I choose any of these other dopey funds that are only making 2 or 3 or 4 or 5%? I'm going to choose the highest one. And so I basically put all my money on black and said, I'm good to go. Now, in the beginning, that was kind of working. As the market was going up, yeah, I was making money. And then, 2008 hit, and I watched my accounts drop, not even joking, like a rock. I mean, they just kept falling and falling, and I was wondering how much they could fall. I guess apparently you could lose everything in the market, but they just kept falling. And I remember when everything hit the bottom, I was down about $75,000. I ended up with $28,000 in my accounts combined, $28,000. And I was shocked. In fact, to be honest with you, I was a little bit embarrassed in the beginning. I thought I had done something wrong. I thought I was stupid, right? And I'll never forget the lessons that I learned, because I started talking to my coworkers. Now, these were people that were 10, 15, usually 20 to 30 years ahead of me in their career. And I was kind of trying to model my path off of many of their paths, trying to figure out how I could do it faster and better than they did. And, I was listening to them talk about 2008 for them. They lost a bunch of money too. But the difference between them and me was they were now questioning whether or not they could retire. And here I am following the same things, the same rules, the same path that everyone else is following. And I realized two very important lessons. Number one, I had quite literally zero control over the outcome. I had no idea why I lost money. Apparently, I wasn't the only one. Everyone lost money. I had no idea how to correct it. And everyone told me that it's okay. That's just the way the market works. But here I am listening to these people, and they're now wondering if they're going to be able to retire. And I realized I'm literally following the definition of insanity. I'm doing the same thing that they're doing, but I was somehow expecting a different result, to retire in my 50s. Now, this caused really a blank. I didn't know what to do, right? I didn't know what to do. And so I went a little bit deeper down the world of it wasn't even alternative investing. I tried to take a little bit more control through some option trading, some active stock trading. That felt just as much as like a roller coaster to me as anything. And I'll never forget when I started to learn what investing actually means. Now, to quote Warren Buffett, many of you probably know this, but Warren Buffett has two rules of investing, and they're really pretty simple rules. And Warren Buffett, arguably one of the greatest investors of all time, says that rule number one in investing is never lose money. Now, here I am coming off of 2008, having lost, better part of 70% of my portfolio. I had definitely violated Warren Buffett's rule number one. But rule number two is even more powerful than rule number one. These are the only two rules that Warren Buffett had. And rule number two was don't forget rule number one. So basically what Warren Buffett was saying is the first and only rule that matters in investing is don't lose money. But here I am in a world where everyone around me, including myself, is losing money. And I'm walking around with my chest puffed out saying, man, I'm an investor. I'm being responsible. I'm putting money away for my future. I'm investing in my 401k. But this caused me to question, am I actually investing? Because it didn't feel much like an investment to me. It felt more like a gamble to me. And so, my friends, as you're listening to this, let me give you the definitions, because words matter, especially when it comes to your money. And we can't call ourselves an investor if we're not actually investing. So are you an investor? Are you just hoping that things work out? So let me give you the definition of investing. Okay. So number one, an investor, defined, is someone who parts with capital. Now, imagine what you've done up to this point to have the capital that you're now parting with, right? You've traded your time, you've stressed out, you've worked hard, you've dealt with bosses, you've dealt with customers, all the things that goes with actually having some money to part with to begin with, right? So someone who parts with capital with the expectation of safety of principal. Okay, do you hear the words, the definition of investing? Someone who parts with capital with the expectation of safety of principal and an adequate return in the form of interest, dividends, or rent. Notice how it said nothing about the rate of return that you're earning being a double-digit return. It for sure mentions at the foundation, an investor is someone who parts with capital with an expectation that Warren Buffett's 2 rules of investing come true. That safety of principal is first and foremost, and then above safety of principal, I get an adequate return in the form of interest, dividends, or rent. Now, the definition of investing is not what I was doing. And likely if you're listening to this podcast either today or at some point in your past, depending on, what investment plan you're following, you haven't been investing either, because the opposite of this is called a speculator. Now, let me give you the definition of a speculator, and imagine where your money is going right now, okay? A speculator is someone who parts with capital with the hope of asset appreciation. Essentially, they are buying low and hoping to sell high at a future resale value. A speculator is someone who parts with capital, money that they've, or time, something that they've traded their time for, with the hope of appreciation. Hey, real quick, before we get back into it, I gotta tell you, if you're getting value here, you'll love the How to Retire in 10 Years Summit. I mean, seriously, everything you're hearing right now, the tactics, strategies, all the insights, they all tie back to this one incredible event. We're laying out the exact blueprint for financial freedom in 2025, and pre-registration is open right now. If you jump in early, you'll get special bonuses that won't last forever. So hit that link in the description or go to retireintenyears.com and secure your spot. Now, let's get back to the show. Now, consider that for just a minute. We've been trained, taught, and educated by Wall Street, by traditional finance, that we are investing when we're putting our money in Wall Street-based plans. But really what's actually happening is we're speculating our money. Now, another word that you could substitute in for speculating is gambling, right? If you wanted to retire faster, might as well just go take your money to Vegas and speculate or gamble in Vegas. Maybe you'll double your money faster than you will in a 401k. But what I learned from this is I learned that, most things that people call investments aren't actually investments. They have no control, and they're just hoping over a long enough time horizon they can buy something and sell it at a higher price. Now, consider this for just a moment. The stock market or appreciation, it's all based on public opinion. How many times has your stock portfolio gone down when the companies behind those stocks aren't necessarily performing worse than before? Maybe their quarterly earnings reports were lower than expected. Maybe the president of the United States gets up and says something stupid about the economy or foreign wars. Or maybe, the Federal Reserve decides not to lower interest rates and the market freaks out. Think about how many things correlate to the appreciation of your assets, and think about what appreciation actually is. Appreciation is just someone's best guess at what the value of something is, and the only way you win in that game of speculating is hoping that someone will buy what you bought at a higher price some point down the road. That's it, my friends. And if that's the only way you're earning a rate of return, for sure you're not investing. And number two, it's going to take you the better part of 30, 40, 50 years to speculate long enough and hope that the asset goes up in a high enough value that you can sell it with enough money to be able to retire. So, my friends, that's really all a 401k is. That's really all stocks, bonds, and not bonds, but stocks and mutual funds are. It's a basket of speculation, target date funds. You don't own anything. You are speculating that you can buy something and sell it at a higher price at some distant point down the road. Now, another golden rule inside of retirement planning is this idea of diversification. Now, let me again quote Warren Buffett on this, because Warren Buffett says, diversification is protection against ignorance. Now, that's pretty crazy to hear the greatest investor of all time, or one of them at least, say that, look, the 2 rules of investing are, number 1, don't lose money, and number 2, don't forget rule number 1. And if you're following those 2 rules, then you're actually investing. And if you're actually investing, you don't need diversification. Diversification is only for those that are unwilling to take control over their money, unwilling to become an investor. And even though they're calling themselves an investor, they're actually speculating, and therefore they have to diversify to protect against their very own ignorance. So when you diversify, all you're really doing is you're spreading your money around. Now, Wall Street has made people so lazy with money. They have definite desires to be able to retire one day, but they're taking such a lazy approach to it. They're not raising their financial IQ. They're not becoming an investor. They're actually speculating and being manipulated with words. And because they're being manipulated with words, speculating, they're then told to diversify, to spread their money out over a lot of assets that hopefully are not correlated with each other. So therefore, one of the things that they don't control, when something goes down, maybe something else that's non-correlated will offset their losses. Do you see Do you see how we've been trapped in a system where words actually matter? And when you diversify, it's basically throwing up the white flag saying, I'm a speculator. That's really what it is. Now, you've been taught to defer your freedom, and that's deferring your understanding and ultimately deferring your responsibility. And worse, you've been taught to believe that it's safe. My friends, there could be nothing more dangerous than trading your time for money for the better part of 2 or 3 or 4 decades, realizing that even though you've been telling yourself you're an investor, you've only been speculating, and as evidence, you've diversified across the market, hoping that one day all of the things that you don't control will work to your advantage, and you'll be able to retire. So real investors, real empire builders, someone who actually wants to be financially free, have to understand that step number one is you have to raise your financial IQ. Money is simply a tool. That's all it is, but it will never replace you as the driver. And if you're unwilling to raise your financial IQ, then you should protect yourself against your very own self-chosen ignorance and diversify and speculate your future away. Now, listen. The difference between being an empire builder, between achieving financial freedom, between being an investor and a speculator is building a plan, raising your financial IQ, and investing in such a way where you have an element of control over the outcome. You have multiple profit centers that minimize or eliminate your downside risk. That's why Warren Buffett talks about step number one is don't lose money, and step number two is don't forget rule number one. Now consider this, because sometimes when I tell this to people, they tell me, oh, well, Warren Buffett has lost money in the market. Now, that is true, but I want you to consider how Warren Buffett invests versus how most speculators are investing. When Warren Buffett invests, he actually does this professionally. He does the research on the companies. He finds undervalued companies that can be optimized and improved, and basically goes in and buys a controlling interest of the company. With that controlling interest, he can then push and force an agenda into the company to improve their operations, to improve their margins, and force a profit margin inside of the investment. He is actually bringing his expertise to the table, and therefore he's investing, not speculating. So my friends, the purpose of this podcast is to help you understand that the power of words will quite literally, really the words that you say are really a manifestation of the thoughts that you're thinking. And if you're thinking that you're investing, but you're actually speculating, you are living in a delusion, my friends. And if you want your actual dreams of being able to retire, being able to live rich and finish wealthy to come true, you have to change the way you think about money, change the way you speak about money, and therefore change the way you operate with the money that you have. Today has been one of the greatest lessons that I've learned in the game of money. And ever since I went from understanding what an investor is to what a speculator is, I've been working diligently day by day, year by year, going on a couple of decades now to improve my financial IQ, to understand money on a deeper, better level, not because I love money, but because I love what money can help me accomplish and do with my life. Money is a tool. That tool buys me options. That tool buys me freedom. That tool buys me space. That tool buys me peace of mind. And rather than living in a world where I'm dependent on outcomes that I have no control over, I'd rather be independent. I'd rather have control and do the work necessary, because sometimes as an investor you fail. Sometimes you learn lessons from loss of capital, and you learn what not to do next time. So my friends, raise your financial IQ, live free, and join me on the next episode. All right, my friends, thanks so much for hanging out today. I really appreciate you tuning in. But before you go, if we talked about something today that made you want to take action, you need to get yourself registered for the How to Retire in 10 Years Summit. It's the financial game changer that you've been looking for, teaching you exactly how to create passive income and financial freedom in 2025. Jump on it early, because we've got a special bonus waiting for you. All the details are in the link below, or head on over to retireintenyears.com. So get registered, and I'll see you at the summit.